Welcome to The Explainer. Today we're going to break down what a stock market crash really looks like, how a single government policy can ignite a fire of global panic, and more importantly, what timeless principles can actually protect your investments when it all goes down.
So, what really causes a global financial panic? We're going to get to the bottom of that by walking through a dramatic story, a story about how policy can create pure panic and how a steady, principled approach can help investors like you navigate the storm.
And to really get our heads around this, we're going to use a pretty fascinating case study, a detailed, though completely fictional, play-by-play of a global stock market crash set in 2025. Think of it as the perfect storm to show us all the key forces at play.
Okay, so picture this. It's the spring of 2025. The market's been doing pretty well, but a single really aggressive policy announcement is about to send massive shockwaves across the entire global economy.
The whole stage was set for some serious volatility. It all kicked off on March 21st when the administration announced this Liberation Day with huge new tariffs. By April 2nd, boom, those tariffs were official, and that sparked an immediate and pretty severe market reaction. A trade war with China, and then a dramatic policy reversal just a week later. What a week.
And this is where things get really interesting, right? You see this huge contrast between the official sentiment and what was actually happening. On April 3rd, the administration was projecting extreme confidence with this statement, but behind the scenes, the market was already telling a very different story.
The market's reaction was, well, swift, and it was brutal. In just 2 days, from April 3rd to the 4th, the Dow Jones Industrial Average just plunged by nearly 9.5%. We're talking a loss of over 4,000 points.
And this wasn't just a Wall Street problem. No way. This 2-day plunge wiped out a staggering $6.6 trillion in value from stock markets all over the world. That made it the largest 2-day loss in history. I mean, just look at this. The drop was severe right across the board. You had the Dow falling almost 9.5%, the S&P 500 losing 10%, and the tech-heavy Nasdaq just tanking by 11%, which officially put it into what we call a bear market.
And that panic, it just spread like wildfire. Over in Europe, the Stoxx 600 index had its worst week in 5 years. And in Japan, the Nikkei 225 saw its biggest loss since the 2020 crash. It just goes to show you how deeply connected the global financial system really is.
Naturally, the policy faced an immediate and pretty sharp backlash from political opponents. Critics, like Senator Chuck Schumer here, accused the administration of, treating the economy like a game, really trying to highlight the real-world consequences for American families.
But even with this historic market sell-off and criticism coming from all sides, the president publicly just doubled down. He told investors on social media that his policies would not change and that, hey, it was a great time to get rich.
And then something truly unexpected happened. So usually, when the stock market crashes, investors flee to the safety of U.S. government bonds. But in this case, the bond market also started to crash. This reversal, which was described as an act of bond vigilantism, it signaled this deep loss of confidence in U.S. policy, and it sent borrowing costs soaring.
And it seems like that shock in the bond market was the real turning point. Probably spooked by that spike in borrowing costs, the administration suddenly announced a 90-day pause on the tariffs. And the market's response was instant. A historic one-day rally, with the S&P 500 posting its biggest gains since 2008.
So after watching all that chaos unfold, the wild policy, the panic selling, the sudden reversal, the most important question isn't just what happened. It's, okay, what can we actually learn from all this?
The 2025 crash is a perfect lesson, really. It shows you there are 2 ways to go. You can either react to the crazy daily headlines and sell everything out of fear, or you can build a long-term strategy that's actually designed to weather these kinds of storms.
So how do you actually build that kind of resilient, long-term strategy?
Well, it all starts with understanding a few fundamental building blocks for a really solid portfolio.
Instead of getting all caught up in trying to pick the next hot stock, a smart strategy really begins with thinking about asset classes. Financial educator Nishka has this great way of putting it. She calls them financial food groups, and each one has a different purpose in creating a balanced financial diet.
And each one of these asset classes plays a totally distinct role. Cash gives you stability. Index funds are there for your core growth. Real estate can give you income, while something like gold is often used to protect your wealth. And then you have the really speculative stuff, like crypto. The key is just understanding their different risk and return profiles.
For most of us, building a solid financial house really starts with 2 main things: First, you need a cash safety net. That's your emergency fund, like 3 to 6 months of expenses. Second, the core of your portfolio, your foundation, should be in low-cost index funds, which give you broad exposure to the whole market.
And this quote really gets to the heart of what index fund investing is all about. Instead of trying to find that one needle in a haystack, that one winning stock, you're just owning the whole haystack. It's a simple but really powerful way to participate in the market's long-term growth.
Okay, so once that foundation is in place, then you can start to diversify. Let's look at a portfolio like this one. Sure, during that 2025 panic, that big 60% slice in index funds would have taken a serious hit. But having 15% in real estate or 5% in gold, assets that often move independently from stocks, that could have really cushioned the blow. Even just holding 10% in cash gives you stability and, the firepower to buy when everyone else is panic selling. This is what resilience looks like in practice.
Ultimately, the biggest lesson from this whole 2025 crash isn't about trying to predict the next crisis. Let's be real, nobody can do that. It's about preparing for it. It's about building a resilient portfolio that can actually withstand the shocks when they inevitably come.
And that leaves us with a final, really critical question for you. Is your portfolio built for yesterday's headlines, or is it built on principles that can endure any storm on tomorrow's horizon? Because by choosing principles over panic, you're building a financial plan that's designed not just to survive the next crash, but to thrive long after it.